Hello, David Moore with Equity Advantage, IRA Advantage. Once again here with Art Scevola, Ask the Experts on life insurance today. So we just had our introduction, and today's title is Life Insurance, the Good, Bad, and the Ugly. So we are now going to hit the good. So why don't you make us happy with the good, Art?
Well, yeah, the good is pretty much what it's always been. The life insurance provides a financial solution that typically is not available through other forms of investments, because you're dealing with dollars that are going to be delivered at an unknown future date for a discount to the actual amount of dollars that are delivered. So having said that, people have many years used life insurance for all of the standard reasons, family, breadwinner replacement, etc. But what we want to focus on today is a certain good that has come about as a result of some of the circumstances that are in the marketplace, such as low interest rates, the tax reform, the capacity that exists in the investment community, the appetite that exists in the investment community to really take over life insurance policies on a legitimate and very well thought through basis that are no longer as necessary as they once were or needed at all. And the reason for which would be a couple of things. One would be businesses, particularly businesses where there is either a dissolution, a sale, or a liquidation of some form, where the principal players that are the older generation, 65 and older, are basically at a point where there's not the need to carry forward the life insurance that the business held on that individual.
So let me interrupt.
Sure.
So a lot of times we look at, like with retirement accounts, we say, okay, you got all this stuff in there. How do you get it out?
Yeah.
So in this situation, you're really looking at the context of, hey, I got this policy. Mm-hmm. What's the purpose and what's it worth, and what's the highest best use for it today, really?
They're perfectly proper words. The highest and best use may no longer be to wait till for me to keep paying for that policy if my business isn't going to do that anymore, and then someday it pays a certain death benefit that's no longer critical in the planning, especially since the business is no longer my business, or I'm no longer an executive that has a certain value to the business. And what's emerged is a very robust life settlement, and we'll use that because that is the current way to describe it, life settlement marketplace among many carrier or many investment funds that are interested in acquiring legitimately a policy that would be abandoned otherwise. So that could be everything from a term policy, which has no intrinsic value whatsoever, it's only a death benefit value, that if it meets certain standards might be something of an asset to that business owner, whether that be the individual principal in the business or the business itself, who could then turn that money into actual current capital, that policy into current capital. So selling your policy in the open marketplace is something we help effectuate.
But we're all being exposed to this, whether we know it or not, right? I mean, if you talk about a lot of times we'll talk about flipping properties, and we've all heard those ads on flipping properties on the radio, or seen them on TV. Yeah. We're seeing this play out. Yeah, and hearing it too on radio and TV,
there are a lot
right?
of people trying to jump into this space because of the items mentioned before, the tax reform and the low interest rate environment, underperforming policies. And we want to be sure and mention underperforming would be somebody bought it and they didn't pay adequate funds, and now the insurance industry, we'll talk about that in another time frame. What I want people to know is that this is a very mature industry. There was a very big stigma in the 90s against this type of a process when we had the medical problem that was the AIDS epidemic, and a lot of people were in this that shouldn't have ever been, and it gave it a bad name. But today the life settlements business is a very robust and very legitimate business. We represent a firm that is in Orlando, Florida. It speaks at estate planning councils all over the country, the top of the tables that are the life insurance industry's best producing people. And we have a group of people who have expertise in helping to evaluate and then fairly bid out a product rather than a single buyer approach, which is what you're hearing on television most of the time, is a single buyer will take your policy for X amount of money and won't you be happier? And the reality is this is a very competitive marketplace, because these products that are being bought are assuring an ROI to the purchaser that is their benchmark. So if that purchaser wants an ROI of, let's say 10 or 12%, it's going to be measured to a certain expectancy on the performance of that policy. That's driven by current medical, current financials of the carrier, current financials on the policy, primarily. No new examinations are ever required, nor will they be taken to acquire a bid on an existing life insurance policy.
So the good is we've got options out there. You've got a marketplace. So if you need it, stuff's there.
Yep.
If you want it, you can use it. You've got options there. If you want it, if you don't need it, you want to sell it. You've got those options there.
And it's barely unknown to a lot of people that there is that marketplace that really represents legitimacy for the business to put forward a policy that they're no longer going to be paying for on a key person or a stockholder that they just would otherwise maybe just throw in the trash or lapse, especially in the form of term life insurance.
So Art, if we finish up the good segment, I think it'd probably be safe to say that the good is you've got these options,
right?
But you need to take advantage of the experts in your life to see what options are actually there, what's going to fit your needs. If you just react to one of these ads and say, hey, I want to buy your policy, number one, what's the thing worth? Number two, who are they looking after?
Right.
And number three, I guess I'll finish with, well, what happens if you didn't really think it through, you sold it, and then things change and you do need it, or the tax laws change once again.
Right.
So I think we can stop this segment right here, and then we'll start.
It's good to evaluate. It's not necessarily saying it's good to sell.
Yes.
Okay.
Good to evaluate, not necessarily good to sell. Right. Come back for the bad. Thank you. Once again, David Moore with Art Scevola, and we're here today talking about life insurance policies and contracts. Thank you.